What's up, guys? So, in this video, I'll be explaining a particular, or rather, a new update about my entry. Yeah, a new update about my entry. And this stuff I want to say now is basically for those that trade break and rate test and price action, a particular price action that's double top and double bottom. As a place where you need to see a rejection of on a support or rejection of support or rejection of resistance. This is for you. Like I said, mostly for those that trade break and retest. My students, they already know about this stuff. So let's get to it. So basically, in this our in this video now, let's start off. Okay, so you all know that I'm a break and retest trader, and I normally wait for a rejection on the 15 or 30 minutes time frame before I enter a trade. And the rejection candlestick I always use is engulfing. So here's the deal about this my entry. Okay, let's begin. Let's say this is okay. Black. Okay, let's assume that this particular stuff here is a support. Okay, let's assume that this particular stuff is a support. Okay, so we have a rejection, a rejection, a rejection, then finally a break. Finally a break. Now, then price gets to your point of entry. Price gets to your point of entry, right? Okay. So price gets to your point of entry. You know, in trading, I always in trading, you will have to wait like 80% patience. Yeah. So even when price gets to my entry, I'm still patient enough to wait for my rejection candlestick, because I always tell people this: no rejection, no entry. Another thing I want to make mention of is, if you are a day trader, always make sure that the daily time frame is speaking into your direction. If the daily time frame is against you, do not enter that trade. Avoid it completely. Even if you're going to take it, make it a short-term trade, like a short-term buy or a short-term sell. I hope you guys are understanding. Always make sure that let's say the previous daily candle is picking into your direction, and the trend of the daily time frame is also speaking into your direction. If they are not, make sure you avoid that particular trade. This is most especially for my break and retest. I do not know about other people's strategy. I'm speaking based on my break and retest strategy. Okay, so let's move on. Let's say that price has already gotten to your direction and we have something of this nature, a bullish candle, just like this. Okay, now I immediately move to my 30 or 15 minutes time frame, 30 minutes time frame preferably. Okay, so now let's proceed. Okay, so let's say we have this now. Then let's assume that this is a 30 minutes time frame. Okay, then we get something like this. While waiting, we get something of this nature. We have a bearish engulfing closing like this, just like this is a bearish engulfing. Now, I do not enter immediately after the closure. No, what do? I rule a tiny horizontal line on that my below that engulfing candle, bearish engulfing candle like this. Now, immediately I roll it. What do? I now wait for the present bearish candle to break that my line before I can enter the sell, just like this. Now, at this point, when it's breaking, this is where I take my sell. This is where I take my sell. At this point here, I take my sell, making my stop loss here. Do you guys understand? Making my stop loss here. In pairs and some pairs here, you should be getting at least 20 pips stop loss. You all know I always use 20 pips. It never gets to 30. 20 pips stop loss and some 15. Some you might even get it as 10 pips stop loss. So you increase your lot size. But if it's getting to 25 pips stop loss, just lower your lot size to equalize everything. Okay. Now the reason for this is because I've studied my journal. And I noticed that most times I hit stop loss after a break and retest. Some will be wondering is because it will be a trap. That engulfing, let's say the bearish or bullish engulfing, will be a trap for you to enter so that it will hit you out. Now, this is what I mean. Let me show you guys what I mean. Okay. Now, after this engulfing, the next candle might re-engulf that bearish engulfing just like this. Please don't mind my drawing. Just like this, re-engulfing it, forming a bullish engulfing. Then it will continue buying, breaking inside that zone and continue buying like with momentum. So that's why I always wait for it to break that tiny zone of mine. Even if the candle, the bearish engulfing leaves off a wick, I always make sure that price breaks that wick. What do I mean? I'll still show you guys. Okay. Now let's say that this particular bearish engulfing leaves off a wick like this. Nice. Okay, so what do? I draw out my tiny horizontal line on that wick and wait for the current 30 minutes time frame to break that wick before I enter. At the time it's breaking that wick, that's when I enter. Remember, at the time it's breaking, it will not at the closure. You might miss out and you'll be tempted to FOMO. Do you understand? At the time of it breaking, that's when I enter. This is what I mean. At the time of it breaking like this, without any wick here, this is when I enter my trade comfortably with confidence, no fear at all, because it has given me what I want. I followed my journal, my rule, and my stop loss will be here. Okay, now the reason for this one also is same thing, but I'll still show you guys properly. After this video, I'll attach my CAD JPY and Euro JPY that gave me 90 and 40 pips using this particular exact strategy. I will show you guys where I entered on the video here. I will show you guys the chart here, or I will attach my screenshot of my trade so you guys can actually see what I mean. Now, this is what I'm saying about this week. Now, in most cases, you would see something like this. Hold on. Sorry, guys. In most cases, okay, in most cases, you would see something of this nature. You would see that price got to that week and still rejected that week the second time. Now, if you look at this image right here on the 30 minutes time frame, if you go to the 5 minutes time frame, this thing will be seen as a double bottom at that zone, seen as a double bottom at that zone before it will reverse. So this is why I always tell people to wait for it. If the engulfing leaves off a week, make sure that the new bearish candle breaks that week before you enter. because you might be heading for a trap. It will reject it, give off another week again, and by hitting your stop loss, and you will be wondering what happened, what happened, what happened. But this is the real deal. Do you guys understand? Now, this is for the entry part. Now, another thing I want to make mention of is when price is retesting to your entry, make sure you can write this down, make sure it leaves no trend. This is what I mean. Okay. This is what I mean. Let's say then we finally have a break. Then as it is retesting your entry, this thing you should look out for it on the 5, 15, 30, and 1 hour time frame, but majorly on the 5, 15, and 30 minutes time frame. Make sure you do not see something of this nature, like market forming a trend while going to your direction. You understand? Like trending while going to your direction. Now, this is the reason market might get to your entry point like this, it will reject. And as immediately you're entering, yeah, it might give you some little profit. It will get down to this particular area here, this resistance, it has broken, and reject and zoom up, buying with momentum. This thing, it happens most of the time. You guys can start now to be observing when market is retesting to your point of entry and it is leaving off a trend. Avoid it. Do not take that trade. Assume it is an invalid trade. Do you get? Like we've been waiting for the retest, and as it is retesting, maybe you see on the 15 minutes time frame, you will be seeing something of this nature: higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Do you understand? Ooh, that's it. In terms of us now, let's say this trade now, this particular thing now, we are trying to buy, and market is already retesting to the broken resistance, here. You'll be seeing something of this nature. You'll be seeing lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Avoid that particular trade. It's most likely to go against you. You understand? Make sure that if price is retesting to your point of entry, that it's not even consolidating. If it's consolidating, roll it out. Call that trade as invalid trade, and do not worry even if it goes to your direction, because there are many opportunities in the market. If you don't catch it today, you would catch it tomorrow. Do you guys understand? If you do not catch it today, you would catch it tomorrow. So that's the thing about this thing I want to explain now. Make sure that it is retesting with a nice momentum. Okay, so let me show you guys. This is all for my entry. I've made mention of two most important stuffs now about when it's retesting and the entry. Now let's take a look at the EURJPY I took. Let's take a look at the EURJPY I took. Okay, now this is it. This is the EURJPY, and my trade was entered from here, from this point right here, this horizontal line of mine. As you can see, I made use of this minor zone here. As you can see, a rejection, 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 a break at the rate test. That's when I entered. Okay, I forgot to show this to a rejection, this particular one here. Then after the break, a retest, that was when I entered. Okay, this is a 1 hour time frame. Now, but I first of all checked the daily time frame. Now, let's go. Now, this is my daily time frame, right? Okay. Now, first of all, I checked my previous daily. This was the particular day I took it, but I checked my previous daily. It left off a very strong wick, showing that the buyers couldn't let the sellers to push lower. That's why it left this long wick, showing you that the buyers, you were strong enough. Then, the present day, when I'm about to take the trade, I saw that the daily was already engulfing, was already engulfing, and it's already breaking this my minor zone right in. I now said, okay. And secondly, the daily was picking into my direction. This double bottom here refused to break. And you all know that double bottom is a what? Price action reversal pattern. So it refused to break this double bottom right here and gave off this week here, and the present daily time frame is already engulfing it at the same time breaking my minor zone. So that was when I decided it's a valid trade for me. So when it broke this resistance here, when it broke this minor zone here, rather, I now went to my 15 minutes time frame. This is when it made the retest. When it made the retest. Now, okay, this is it here. The break, the retest. Now, let me show you guys when I entered. Look at it here. As you can see, it's that same minor zone, okay? Now, this is when I entered. After this bullish engulfing right here on the 15 minutes time frame. Let me show you guys. This is the 30 minutes time frame too. This was the break and retest. But I used the 15 minutes because I loved what I saw on the 15 minutes. Now, look at it here. I'm trying to zoom in so you all can see it properly. Okay. Zoom in more. Okay. Then let me show you guys. Okay. Okay. Now this is where this is what I saw before I started considering to enter after this bullish engulfing. First of all, it left us with this doji, and you all know that doji is a deceleration pattern, showing you that market is already trying to change direction. But that's not what I was looking at. It was after this engulfing of this doji. Okay, what did I do? I mapped out that my tiny horizontal line. My tiny horizontal line. Sorry. I normally use this trend line to draw it, okay? I mapped out this, my tiny horizontal line. Then I waited for a break of this zone here that you're seeing. So what did I do? Immediately I got that break. This was the point I entered. I entered at this point, okay? Let me still show you guys. I entered at this point, exactly at this point. That was when I entered. And my stop loss was here, below that engulfing. That's here. Let me show you guys. My stop loss was here, below that engulfing, right here. And I entered there. So if you check the stop loss from here to here, it should be giving you around 17 pips stop loss. So I used my normal lot size. And what happened, as you can see, market, immediately it broke it. And also, I forgot to mention, I actually observed before I dropped my phone. I knew it was going to my direction already. I watched out for this zone here, this resistance here. Another point, I watched out for that resistance. So when I entered, everything was in place, going in my direction. market got to this point, that resistance rejected a little bit, but after this particular engulfing, that was when I said, okay, that this is my trade. That was when I now took eye off the pair and was busy with another thing because I do not watch my trade. So that's when broke that point, that resistance, and started buying. And it came back for the retest, but I actually missed this retest. Look at it here. This is the retest. As you can see, it retested that broken resistance. And where would I have entered at this particular point here? This particular point here, as you can see, I love this candle here. You understand? I love this candle here. Then, but I wasn't really paying share because there were lots of opportunities and I still entered CAT JPY that same day. So that's it, guys. That's how I entered Euro JPY trade. That gave me almost 900, almost 100 pips. I took the trade out from here. There was a resistance on the 4-hour time frame. So I took the trade out from here. So that's it, guys. Any question, you can just DM me privately or drop it on the comment section. Thanks for watching, guys.